Hello everyone, hope you're all well, and several weeks into the new normal, you and your families aren't climbing the walls too much. Welcome to what we hope will serve as a welcome distraction from endless Zoom calls and homeschooling, as we know is the case for many of you. My name's Jeff Ando, I'm Head of Content at GTR. I'll be your host for the next 75 minutes in this GTR UK summary webinar. As you'll likely recall, next week we should have been holding GTR UK 2020 in London, our showcase event for the UK trade and export finance market, discussing the new landscape post-Brexit with a new majority government. I think it's safe to say that things haven't quite turned out as planned. We do, however, have a fabulous lineup of experts today as we consider the future, uncertain for so many in light of the coronavirus pandemic. Please do use the Q&A function on your webinar screen to submit questions, rather than the chat function, which we won't be using this time. We've got a special Q&A session at the end, so we'll go through any questions then, bringing speakers back in where relevant. I'm first joined by Dr. Rebecca Harding, CEO of Coriolis Technologies, and someone known to many of you, who's going to kick us off with a few slides and an overview on where we stand now, after which she will lead a short Q&A. Rebecca, over to you.
Hi everyone, and thank you very much for inviting me to this session. I'm really excited to be looking at the UK economy and looking at the new normal in terms of global trade. I think it's fair to say that we're going to have to reconsider everything. When we come out of this crisis, if we come out of this crisis, it's almost certainly not going to be how it was in January. Remember January? We were so optimistic. We were thinking that this was going to be a year where trade finally started to pick up, where we were starting to get an increase in trade finance. We were so positive about the end of the trade war, and we were beginning to see markets stabilise as well. But as a result of the lockdown and as a result of the coronavirus, what we're seeing now is an estimated drop in GDP globally. Now, the IMF are usually fairly optimistic, and they're saying the whole global economy is going to shrink by nearly 1% this year, from a growth prediction of around 3.4%. They're forecasting a drop in world trade, and never let it be said that the WTO doesn't err on the side of precision. We're forecasting a drop in world trade of anything between 13% and 32%, according to the World Trade Organization. Now, that's absolutely colossal. And the most worrying thing from my point of view is the fact that we're seeing an increase in nationalism. And that has to be everybody's concern who's listening today, for the very simple reason that if we're more nationalistic, what it does is it hinders the extent to which we can be multilateral in the way we organise trade. So it represents a real threat to the way we're trading with other nations. That's just an overview of the global economy. What is this going to mean for the UK economy? Well, the Office of Budget Responsibility, again, not necessarily noted for their extreme pessimism, are predicting up to a 35% slump in GDP this year. We haven't even begun to assess the impact on trade at the moment. We really don't know. But if you think about the forecast projections and take an average, last time world trade collapsed in the way that it has done this time, the UK fared about 5% worse than the global trade trend. So global trade shrank by 22%, UK export shrunk by nearly 27%. So we're looking at a serious downturn in UK trade. Add to that the fact that we've got the simultaneous effects of Brexit, and we still don't know whether or not there's going to be a smooth transition to new arrangements. And what it does is it points to a very clear need for absolute strategy, clear thinking, and a very clear and calm view of what's going to happen in the future, because UK isn't going to be the same. UK trade will not be the same. Next slide, please. Now, I just want to focus on this point that I made about nationalism. If you look at the way in which countries have responded to the COVID-19 crisis, you can see here this is Intracen ITC data. They've mapped all of the increases in protectionism and the liberalisation as well. Now, interestingly enough, you've got 88 countries that have imposed more restrictive measures on their trade in terms of exports, but most countries have actually liberalised imports. Think about it, that doesn't work. If you're restricting exports and liberalising imports, you've got a lockdown in trade as well. This is in medical devices in particular. So we've got this increase in nationalism. Even the European Union has kind of retreated to national interests, and the UK itself has done exactly the same thing. So the rhetoric is very much more national. That has to have an impact on global trade. Next slide, please. Now, where are we now in terms of the COVID-19 supply chain? So just in terms of what we are looking at in Coriolis. And you can see this comes from our data. So the global market for COVID-19 supply chains is actually really large. It's nearly 38 billion. So we're looking at ventilators, we're looking at respirators, aprons, gowns, and so on. The market is dominated by the US, Germany, and China, but trade growth at the moment is actually negative in those sectors. So we're seeing less trade happening, and actually by a significant margin. So we're looking at 10–15% reduction in trade this year, for the very simple reason that countries are hoarding it. They're keeping it to themselves. But there's also a very big difference between what is traded in China, what is exported from China, and what's traded from the US and Germany, for example. So US and Germany tends to be very high-end ventilators. China tends to be more aprons and protective equipment. Now, where does the UK sit in all of that? The UK is the 8th largest exporter. And again, you can see very clearly that US and Germany are our major partners. We're beginning to see trade with them looking like it's increasing. So what's interesting in UK terms is that our trade, our exports and our imports look like they're increasing by around 3%, whereas the global trade is actually on a decline. In terms of the number of companies in the UK involved in all of this, there are about 1,500 companies that are actually in the COVID-19 supply chain. And again, they tend to be at the high-end equipment level rather than at the sort of aprons and gowns end of the market. And our exports of all of these things are set to grow. And that might be because we're seeing companies come into the market and say that they're not able to trade with UK NHS suppliers as well. But what's interesting is that we are still exporting, and this is a growth market. So maybe we're more integrated and more dependent on the multilateral supply chains than perhaps some other countries are. Next slide, please. So I just want to draw some conclusions, and apologies for this being a bit of a tour de force, but it's just laying out the issues. As I said at the beginning, trade is never going to be the same again. We're already seeing the localization of supply chains. That's been a trend that's been happening for a few years, and we will see that accelerate. There will be a greater role for technology. We're already beginning to realize that that digitization has to be a way to go in the future. And that's, again, it's a trend, but now that we're all working from home, it becomes more paramount that we adapt to digital technologies more quickly. The role of the state in a trade sense is going to change. Now, we've seen, again, this trend of nationalism creeping in over the last few years. You all know I've written extensively about it, but we're beginning to see more economic protectionism actually visibly as a result of COVID-19, but we're also beginning to see more engagement of military in trade, just literally moving stuff about, and more surveillance as well. So this again adds a layer of nationalism and a very fundamentally different role of the state. But we're also going to see a change in the role of international organisations. We've already seen it with the World Health Organization. We're likely to see that as well with some of the other organisations of trade. Again, trends that are happening. As I said already, labour markets are likely to become more digital, more automation. That has consequences for trade. Finance, as we'll talk about, also likely to change, and the way in which we organise trade finance. And all of this has a profound consequence for the SME sector, because the SME sector is going to have to adapt to all of these, and how it accesses finance is going to be tricky. Just draw some conclusions in the next slide on for the UK in terms of trade never being the same. Is the UK going it alone? We still don't know what is going to happen with Brexit. Our outlook in January suggested that trade for the UK was at best case going to flatline. We can expect a drop in trade at least in line with what's going to happen in the rest of the world, but probably slightly worse. We're seeing a fundamental shift in the base of the UK economy. We will see a big structural change because our relationship with Europe is going to change at the same time as the whole world is becoming more nationalistic. And we have levels of debt that the like of which we've never seen before. And this is going to affect the way in which we recover from the downturn. I was thinking of examples from history, and I'm going to leave you with this, this thought. Are we talking about the 1920s and the consequences of the 1920s? Are we looking at the Marshall Plan? And let's think that the UK benefited under the Marshall Plan as well. We've only just started to pay off that debt. Or are we actually looking at a worst case scenario where we're talking about the shutting down of whole industries and whole sectors, equivalent to Eastern Germany in 1990 and 91? And those, you may say, well, that was uncompetitiveness. Well, we're talking about a new way of trading. We have to look at a complete restructuring of our economy as well. And maybe there are lessons to learn from that example. I think it's fair to say uncertainty is a new normal. But this is very damaging, particularly for small businesses and for the trade sector. So thank you very much. I'd like to bring in Hmrc, if I may, and ask a few questions on all of that from a banking perspective.
Hello, everyone. Hello, Rebecca. Fantastic
Hi.
presentation, as always. I'm fascinated listening to your insights. So thank you so much for that.
No worries. Well, it was a bit of a tour de force. And as I said, I hinted at the challenges that we're all going to face. How does it look from the coalface at the moment? Is anything that I've said reflected in your experience?
Well, quite a lot. If I start saying from an insider perspective, what the banks are seeing is, I think unprecedented is the right word. Because it has been, and it is unprecedented, the amount of the state aid to support businesses in the UK. Personally, from how we had to pivot our ways of working, this is not just about adopting to work from home. No, the sheer volume of applications that we're seeing, ability to service our customers is our top priority. And you know what? It's also unprecedented because everybody gets the gravity of the situation. So, you know, I had my trade specialist supporting people through web chats when people are applying for civil loans, for example. So it's fantastic. It doesn't matter whether you're MD, director, manager, you absolutely are doing your due. We're working 24/7, and it actually gives us that the strong feel of supporting the UK economy the best we can. And I don't want to make it a pitch about NatWest and how we support our businesses. That's not my point. The point is it absolutely changes your perspective. It's straight away, you are very, very clear and focused. What is the most important thing at the moment? And definitely we resonate with that. The trade is severely impacted, as you rightly say. You know, the traditional trade, when we are in this pandemic, is being tested because you have massive challenges with document presentation, for example. So we do believe some of those challenges could also lead to some positive developments post this crisis.
So let me pick up on something there. I mean, we're seeing trade reduced, and we're seeing undoubtedly a real shift in the way we're doing these things. So you've hinted at new technologies, but there was something that I picked up in press coverage over the last couple of days, which really worried me from a bank perspective. And I'm putting words in your mouth, but it was a report in the Financial Times that said that there was a concern about the credit insurance sector. And that the credit insurance sector was actually potentially, particularly the private sector, but the credit insurance sector was to some extent pulling out. What can banks do? What are the consequences if credit insurance stops? What are the consequences for banks, and what can governments do in that space?
So I think it's a very valid challenge, and I just last week attended the UK Finance Product Board when this very topic has been discussed as well. I think there is actually a lot of lobbying already happening with the insurance industry and the government, because the trade credit insurance in the normal conditions supports a lot. is not just a default scenarios, it also supports protracted default. It depends on the individual business credit TCI policies that the businesses have in place. There are extra complications linked to litigation, for example. If the courts are not open, you cannot pursue your debt, and sometimes the lack of ability to pursue that debt means you cannot have a valid claim with the trade credit insurer. So all those things are being discussed, and I think there is a lot lobbying happening with the government. But I must say, based on our work with the TCIs that we work as a bank, they have been fantastic. And whilst they cannot offer necessarily yet a blanket approach, because that's difficult, I have seen fantastic response on a case-by-case basis. So I think there is a recognition from that sector as well. It's not easy, as you can imagine, because understanding your liabilities when they're crystallizing en masse is very challenging. But as I said, our response from the TCIs we're working with has been really, really good, and support that was there for our customers.
So just taking that on a little bit, do you think SMEs are being supported by government measures at the moment? Do you think there's enough out there for the SME sector? Or do you think that at the moment the CBILS and the loans and everything actually aren't necessarily appropriate for the exporting SME? How are SMEs faring in all of this?
So I think it's important I do believe that the level of aid currently provided by government to the SME sector is on a scale we've never seen before. And seeing and underwriting those schemes and loans and various other initiatives as well. Obviously, it's not just the loans, it's the grant that the Chancellor introduced through the furlough scheme. So I think there is plenty of happening. The exporting point is interesting, because if you look at eligibility criteria under CBILS, there were some misunderstanding. For example, if you're a business that has activity that is focusing on exporting 100% of the production outside of the UK, there were some restrictions. Having said that, I think there are this is a fluid situation, and we have seen how various eligibility criteria are shifting. So when we see situations like that, we provide a feedback back to the government to make sure that the scheme has wide-ranging eligibility criteria. But the export point definitely caused challenges to begin with.
So one last question, just in the interest of time. One last question. The banks were the villains of the piece in the last financial crisis. And I remember when I was chief economist at the British Bankers Association, everybody was running around saying, how do we make people love banks again? And the idea of loving banks, I mean, it might be slightly strange, but is this the opportunity for the banking sector to step up to the plate and make everyone love banks again?
Well, I certainly hope so. We definitely feel like key workers. Whilst we're working hard, we're working in a safe environment. So I would not even put ourselves on a par with the fantastic work that is being done by other frontline workers and people who put their lives at risk. But if it does feel that through every single day, we're trying to put the best out to the communities we serve. And that spirit, I think it permeates across our bank and across all the other mainstream banks. There is a lot of collaboration also happening between financial institutions to support the customers through these times. So I think that I'm hoping this can put us in a far better light than in the past times, for sure.
Let's hope so. Jeff, Hmrc, thank you so much. That was really interesting, really insightful, and great to hear from the coalface. Jeff, back to you.
Thanks to Rebecca and also to Hmrc for that introductory overview. I see that we've got around 200 people online, so thank you everyone for dialing in. Please do submit your questions using the Q&A function. We'll be going through some of those at the end. Our next section looks at the impact of the current situation on UK companies and UK manufacturers in particular. To guide us through this, I'm delighted to introduce Mark Ling, Head of Trade and Supply Chain at Santander UK.
Hi Jeff, good morning everybody. Great to be here with everybody. So I'll just pick up the theme from Rebecca and Hmrc. So I was asked to talk about what is Santander doing about the COVID-19 crisis, and what are our what's our reaction to it, and how are we supporting our customers. So like all of the major banks, we're very heavily involved in the CBILS, and as of early last week, the Clibbles program. But most importantly, we're all very focused on supporting our customers and understanding what their challenges are, what their needs are. So whether it's looking at loan extensions or just, as I say, rolling over loans or supporting with overdrafts, in addition to all of those new government-backed schemes, that's our relationship directors are very, very focused on supporting our customers get through this crisis. So specifically on the trade side, we are also working very hard in providing insight-led information to our customers. So we're running a series of sector or industry-focused webinars that really try to give them some insight in terms of what's going on in their particular sector. So we're using a lot of our partners in that. So Stephen Phipson from Make UK, which is the Manufacturers Association, the Food and Drink Association, where Ian Wright has done a number of webinars for us. And we have a full program basically of these type of webinars that, as I say, very sector focused, trying to bring insight and ideas, not from the banking perspective, but from the industry perspective. So that's very much what we're focused on. Picking up on the export theme, I also chair one of the industry committees within UK Finance. We've been working for a long time with UK Export Finance on the various schemes that are available today. Quite exciting. We have been working very, very hard in the last 4 or 5 months on a new general exporters facility. It's called GEF for short. I'm pleased to say progress is gathering pace there, and I hope from an industry perspective that we will be able to bring some more support into that export community, particularly as we start moving away from some of the lockdown challenges that we have today. And of course, none of us know what exactly and how we're going to lift, and different countries will operate differently. But basically, we're trying to look at, what does life look like as we move through this process and after, and how do we support our customers? So that's really interesting there from an industry perspective, and vital that we're ready to do that. We're also looking, as Hmrc said, there's some a lot of detail in the various schemes of Clibbles and CBILS. There is a provision to support the import side of trade, and we're looking very closely at that. And we will work collaborative in industry on that as well to see how that can be specifically applied. But again, I see that as how we can move out of now. It's not the immediacy of the crisis we're in now, but as we start to take steps to move out, how do we support that? So enough from me and my just general comments. I'd like to bring in a real exporter now. So Claire Hunter, who was the Young Exporter of the Year in 2019, and is from Coltraco Ultrasonics. So I think the first thing, Claire, is, can you tell the audience a little bit about your business and the effect that COVID-19 has had on you so far?
Yeah, thank you very much, Mark. Very kind of you. And it's great to see everything that Santander are doing to really support your customers. So yeah, we are a high exporting manufacturer. We export about 85% of what we do to 120 countries. And what we actually do is design and manufacture innovative ultrasonic safety technology. And COVID has really got us thinking about how we do our business. So from about the 12th of March, we started looking at our strategy and really connecting firstly with our own team to reassure them that we are here to protect them, and then also to ensure that we can reach out to our global customer base and show them that we're going to keep business as usual as much as we can, and in accordance with the government guidelines of working safely. So we're quite fortunate that in our normal day-to-day working style, we do have the ability to work flexibly and to work from home. So it hasn't been a massive culture shock for us. Though of course it has meant that we can't go and meet our clients as regularly as we normally do around the world and go to all these international exhibitions. So we are quite resilient, but obviously it requires a fair amount of challenge and a bit of forward positioning.
Okay, Claire, just tell me a little bit more about the business. So what exactly do you do? So just to help the audience understand your perspectives, so we can understand that.
Yep, so I'll focus on one sort of technology strand, which is on fire safety. So our motto is safety for safety's sake. And what we want to do is ensure that the people and the assets and the infrastructure that they're working on are as safe as possible from a fire safety perspective. So for instance, in data centers, this has been a big issue at the moment, because obviously all of us are working from home, the hospitals are in overdrive. The data centers are now working about 15 degrees hotter than usual. And this has obviously led to an increase in fire risk. So our technology goes in to inspect the fire suppression systems that are working in the data centers, and we offer inspection products and constant monitoring of those systems.
Fascinating. So I can absolutely see the data centers being a real hotbed at the moment. So have you actually had to access any of the government schemes at the moment? And if indeed you haven't, have you had a look at them?
Yeah, I mean, we get the coronavirus updates every day, and we're very much involved in ensuring that we are investigating all of the different government schemes that are coming out. And it is actually fantastic to see that the government is responding so much to what the banks are saying and what the business is saying. So one thing that we think is perfect policy is the Hmrc PAYE deferral scheme. And we found that really easy to access, and they gave us the flexibility to either not pay for now, pay in part, or pay later. So that was great. We have not had to apply for furlough or CBIL yet, which we're really pleased about. But one thing that we have applied for, which we thought was fantastic, is that the government have, in part of their COVID response, have opened up Innovate UK to do a funding scheme of between 25,000 to 50,000. And this is to focus on a business-led innovation to respond to this global disruption. So we applied for an ultrasonic compartmentation and tightness detecting of negatively pressurized hospital wards. So I'm sorry for all those, it might be quite technical.
No, look, it's interesting, but also important that we, some insight in terms of what your business do. I think that the key thing here is that, as well as the headlines that you see around CBILs and CLIBILs, but there are an awful lot of schemes and an awful lot of support that is both, a multitude of it from government sources, but also from, the banking industry and other partners, equity markets, etc. So, it's not a one size fits all, and people need to understand all of the different schemes that are out there. And trade, could have some nuances as we move forward. As I say, I think as the export and import flows start to recover, and take some of Rebecca's statistics from that, then there will be a new norm, I think, in terms of how that business gets financed, because balance sheets of companies have been affected, and therefore the analysis will have to change. So just tell me a little bit, Claire, about what are your thoughts about, how your business will evolve over the next 6 to 12 months, particularly, as you said earlier, that, there's going to be travel restrictions clearly for everybody. We don't know to what extent, but it's going to be restricted. So how do you think you're going to go about, developing? Doesn't sound like you need to access new markets if you're already active in 120, but how are you going to go about developing your business in those markets if you can't travel?
Yeah, well, it actually links very well to your last point, which is that DIT are very much still out there. And I know that you are quite well connected as well with DIT and with whole Exporting is Great campaign. And the role of the Her Majesty's Trade Commissioners are still out there fighting to try and connect business with the UK. So our DIT ITA, Hilary Charman, reached out to us within the first few weeks of lockdown saying, we're here and here is some access to government funding. So that's one thing on the government side. But for us, we recognise that there has been a drop in global demand of about 20 to 30%. So our strategy is now turning towards our secondary markets. So we have 6 key markets and then about 20 other secondary markets that we are now driving forward to try and find global distribution partners to help us cover that complex matrix of countries and sectors.
Excellent. So I think as we're using now, some of the new technology or the technology that's been out there that perhaps we haven't always used frequently, so whether it's Microsoft Teams or Zoom, these technologies really do work, and I think we'll see more and more of that. And certainly, from our perspective in Santander, we've led for a number of years numerous trade missions, but we not only did we do a physical trade mission, but we did virtual trade missions, and we will absolutely accelerate those plans. And we're already, go ahead. So
just like even on small things, like we're all very happy to use WhatsApp, and WhatsApp is very much used worldwide for people to have quick communications. And we just added a new chatbot to our website, and we're trying to just show that we're available in other methods, like doing different YouTube training, and we'll also be looking at webinars, not only for presentational style things, but for more training aspects, to try and reach out to our customers at the same time as with our distributors. So we think, like you, that there's a lot of opportunities here. We all just have to be a bit flexible and accept the fact that we are working from home, that they might be children or pets or lorries reversing and so on.
Absolutely, absolutely. Thankfully, my retriever has not made an appearance yet, so that continues. So, and last question from me, really. What sort of support are you going to be looking for from banks and other partners, as we move forward? I'm thinking particularly about your supply chain, Claire, and how you further develop those international sales.
So we think that it has been very interesting to see that, yesterday another scheme came out, the bounce back scheme, whereby that £50,000 is available. Obviously that's going to be very helpful to the micro businesses. And we just are interested to see, maybe there's a possibility for the government to open that 100% sovereign guarantee to fulfill schemes maybe up to £250,000, which we think would help a much wider range of businesses. There seems to be a lot of appetite within business to have more government involvement. But for us with the supply chain, we're just incredibly thankful that we have decided to have kept our manufacturing in the UK. It has enabled us to shore up our supply chain across this disruption that we're seeing specifically in Asia and China. And we wonder whether it's a time for other manufacturers and other companies in the UK to think about bringing their manufacturing home. And perhaps that's a way that we can then see opportunity for growth in our own country as we hope to use export strategies and double that growth in the future. Yeah. So I think it kind of needs to come from within business as well as these government-led schemes that are working very closely with the banks.
So self-help is absolutely key. If everybody waits for the government to come up with the answers, we'll be here a long time. So really, really key that the strategic planning and thinking about digitalisation strategies, if you haven't already got one, that absolutely key. And there are a lot of businesses out there that can help on that journey. And I think the word that Hmrc used earlier is absolutely critical, is collaboration. Yeah. So I know the financial services industry is collaborating like never before and needs to accelerate that. And that it's a much wider ecosystem required, particularly for exporters, to support them as we go through this. But I don't think globalization is dead by any means. I think you're right. There needs to be some strategic thinking about what parts of your supply chain or your manufacturing supply chain you can look at other markets or domesticize if necessary. But fundamentally, it's going to be about flexibility, and that's the one thing the crisis has shown us, is that we need to have choices and we need to have flexibility and alternatives. So great, Claire, really, really great to meet you, even though it's on a digital basis. That I look forward to meeting you in person at some point in the future. And Jeff, I'll hand back to you.
Thank you.
Thanks to you both. Thanks to Mark and to Claire. One of the notable trends that we've seen, perhaps unsurprisingly, is that the changes in the daily lives for so many people and for so many businesses have increased opportunities for criminal activities. So our next question is, how can we make sure that crime doesn't pay in the era of COVID-19? To take us through this part, we've got John Burbidge-King, CEO of Interchange Solutions and something of a specialist in this field, who's going to lead this section of today's webinar. John, the floor is yours.
Yes, good morning, everybody. Thank you, Jeff, for that introduction, and thank you for inviting me. Our company, Interchange, and by the way, that wasn't a product placement behind. I do apologise for everybody watching, I don't have a nice tidy study with bookshelves or a white wall, so I just pop something up to cover the bad wall. Our business is a small company. We were set up in 2006, and we help organisations, private and public, of all sizes to mitigate bribery and corruption risk. I'm joined in this discussion, and I'll introduce Jaya Vohra at the end, because I'm going to ask her some questions. And what I want to do, next slide please, is talk about organised crime and the impact of this during this pandemic. So far we've stood on the good side of life, but the art of profit is based on exploiting need, and no one's perfected that dark art better than organised crime. In every crisis, be it war, natural disaster or a pandemic, those criminally minded will capitalise on the misfortune of others and seize the opportunity for personal gain. And not in our lifetime has there been such an opportunity for crime as COVID-19 crisis, as it's affected nations, governments, businesses and citizens worldwide. So this is somewhat different because the opportunity is to strike anywhere at any time. Next slide, please. So from a criminal point of view, has anything really changed? Well, it goes on as normal, if you might say. Fraud, theft, cybercrime, extortion, drug dealing, and worse continues unabated, as we see in our newspapers. But we don't connect with that as businesses. And what I want to do is to explain how that might just happen. Their modus operandi may have changed, aligned to the opportunities, for example. For example, county lines drug dealing may be impeded by the lockdown. So where else have they got to go? Well, they're exploiting a high demand for certain goods, of which we're well aware of. There may be a black market for profiteering of costly medical kit, but criminals have jumped on the opportunities for the low-hanging fruits of PPE, medicines and testing kits. The decreased mobility and flow of people across the EU in particular might have stopped some drug and people trafficking, but they've switched to other opportunities too. They've changed their product, as it were. They've become as agile as companies have. Citizens at home are remaining at home and increasingly teleworking, relying on digital solutions. But some may be opening themselves up to cyber attacks, and the criminals can gain access to insecure company networks through home routers. Limitations on public life are going to make some criminal activities less visible and displace them from home or online settings. They may feel that enforcement, intelligence gathering and prosecution is weakened. But as already mentioned earlier, states will take more interest in what is going on in the economy, and surveillance is likely to increase. And finally, public anxiety and fear creates criminal opportunism through agility and exploitation. So let's quickly, next slide please, have a look at what we're thinking here. This is a page from the UK Strategic Assessment from the Serious Organised Crime, the National Crime Agency's plan for 2021. What it shows is the scale of the organised crime threat in the UK from some currently 4,772 organised crime groups across the 4 countries or make up the United Kingdom. Now, these groups do not operate in isolation and will network in others across the world. And some are indeed international criminal enterprises or connections. They will use secure encrypted phones or burner phones. They're the ones that you see in all the films where they throw them away and chuck them in the river or under cars, or used for single purpose and then destroyed. And approximately, the NCA says 100%, there's no approximation, of NCA investigations encounter some form of encryption. So they are as smart as everybody else. Next slide, please. So some key issues for business. Well, which companies are most at risk? All companies are most at risk. But those that are less well prepared with weak compliance in all its forms, and sadly, with no aspersions to Claire and Contralto, these are commonly the smaller companies. The impact of lockdown on home working. We've discussed this. It was interesting to note yesterday that potential sellers on a popular website are now required to undergo face-to-face due diligence, as too many sellers have crept under the radar screen. And are compliance and communications processes robust enough for the current scenario? Does the table of authorities, the compliance policies and processes work with dispersed, furloughed, and sometimes unsettled staff and management? Business worries, frustration, cash flow, cutting corners, watered down compliance approaches. There's been even suggestions the law might be on bribery, might be pulled back. Here is the real one, potential for illicit funding for businesses. We know it happens in Italy from some of the organized crime groups. And with respect to Jaya and Santander, banks slow to or cannot meet urgent funding requirements for reasons of due diligence and others, offers from so-called professional enablers operating on behalf of organized crime groups will offer loans to distressed businesses, primarily to launder cash. Bribery, goods and services trying to get through customs and importing and exporting of goods and services, driven by the need to push product through, but through limited airport and port facilities and worldwide. And finally, fraud, internal and whaling it. If you don't know what that is, that's otherwise known as CEO fraud, which is the impersonation of senior colleagues, senior executives in a company, asking or indicating by email for employees to sign off invoices and other. Fraud of substandard supplies, cyber attack. So that sets the scenario very, very quickly. And now if I can introduce Jaya Vohra and ask her some questions. Next slide, please. So Jaya, would you like to introduce yourself just for a couple of minutes?
Hi, John. Thank you. And thank you, Jeff, for inviting me to this panel. Hi, everyone. I'm Jaya Vohra. I head up product management for trade and working capital for Barclays, which essentially involves end-to-end product lifecycle management for documentary trade and open account products. Thank you, John.
So Jaya, we've got three banking challenges here, which we'll briefly cover. My first one is, given these scenarios I set before you, how are banks responding to this? Is it just business as usual?
Thanks, John. Absolutely not business as usual for anyone, I think, across the globe. This pandemic has disrupted decades of trade practices overnight. We are in a new normal, and I'm pleased to say that banks have adapted at lightning speed to the challenges this pandemic has brought to the fore. I echo Mark and Hmrc's comments from earlier. I think banks have proven resilient and have had to change working practices at lightning speed. Who would have thought that large and complex organizations like banks would have the agility and the ability to adapt at such pace? However, banks need to do so in a risk-assessed fashion, which all banks are doing. And if we don't, there are more opportunities for fraudsters and criminals to exploit the vulnerabilities that this pandemic has created. Key areas impacting banks, first are our people. We need to make sure our people are safe and well and are equipped to work from home to best serve in our clients' interests. There are specific areas of banks like operations and technology teams that will find it more challenging, especially with trade, with working on documents on screens from home is not ideal. So I empathize with all those who are doing that across the board. One of the key challenges we faced in this pandemic is clients and accessing banks. Electronic signatures is a big issue, especially for trade. Handling of physical documents is a big issue. We've also seen courier services being stalled in some countries where there's severe lockdown. And trade, as you know, is so heavily reliant on paper, and for those couriers to keep working, we've had to collaborate and come up with solutions and workarounds for that. Again, a big issue for trading companies is presentation of shipping documents, say under an export collection or an export letter of credit. obviously the industry has been working towards digitization for a few years, but who knew the need of the hour would be so soon? And I only wish we would have been further along the curve, but I think now is the time. It is a wake-up call for the industry to actually accelerate that progress. And what we can do at this time, banks, just be close to clients, be understanding of their needs, ensure there is consistent service provided to them, ensure the gates are open despite the challenges. I think we've seen across all banks that executives, the policies, folks around the bank are very willing to change and adapt. So we should use all those avenues possible to support our clients while making sure we are keeping to and making sure our controls are safe to support clients.
Jaya, that's fine. Can I pop the next question to you, since you've mentioned the word executives? What are the key concerns of banks for executives, managers, authorised managers working from home, especially those in the smaller companies and exporters? What's the concern there?
Thank you, John. I think the top concern is that of access. As I said, how do clients continue to access the bank's facilities, products and solutions, especially where digital channels are not enabled? Obviously, one concern is of funding that is being addressed through government schemes. Further, if clients are not on digital channels, electronic signatures are a big issue, and banks have come forward with guidance. The industry has also published guidance to support banks to continue providing that service to clients. Banks are present internationally. Global banks especially will see this challenge of different countries have different law frameworks and whether electronic signatures stand up in courts of law overseas. So what we've had to do is adapt, overnight, do our due diligence and create frameworks across the globe to support our clients. Exporters, as I said, small exporters especially will be impacted by presentation of physical documents. The industry is not at a space wherein trade has been digitalized. So banks have had to collaborate and come up with solutions to support clients at this time. Examples like, claims against guarantees mostly require presentation of original documents. And doing so, in putting all these workarounds in place between banks and clients, we need to be very aware that we should put the right safeguarding measures in place and educate clients. It's very important for banks to make sure vulnerable clients especially are aware of what they are taking on, what risks they are taking on, and therefore do continue to do business in a very safe manner and be aware and alert to the risks. We've seen, sorry, John.
Sorry, I've interrupted there because we've moved into the smaller companies, the exporters. Can I ask you the third question? So we've moved into some of those measures. What additional measures are banks taking linked to trade transactions to check the legitimacy of origin and the transaction?
Hi, absolutely, John, thank you. So first, of course, is checking authenticity of instructions is key, making sure whether it's your clients or the beneficiaries of their trade transactions, you've got authentic instructions in, you're close to your clients, you understand what they're doing with their business. We've seen a trend in change in line of business, so certain companies are adapting today to support the medical fraternity with PPE and ventilators and sorts. We need to make sure that the transactions we are getting and the trade documents we are getting are supporting genuine transactions. So pick up the phone, talk to clients, make sure you're aware that there's a genuine contract supporting those transactions. And the best thing we can do is therefore be close to clients and have synergy across the bank with our operations teams, talking regularly to the frontline staff who are closer to clients, and make sure there are escalation procedures in place to understand whether transactions are genuine or not. It's a difficult job, right? And people need to be trained on this and have the right people up the chain looking at the transactions if there are some concerns. Where, of course, instances are spotted, it's right to ask the right questions of clients, and most clients are genuine and they would be supportive and support you in that due diligence. I think banks also need to work closely with correspondents. As Mark and Hmrc mentioned earlier, collaboration is key here. We've had issues with banks sitting on piles of documents because the DHL is not delivering in certain locations. But actually working with your correspondent banks, you can come up with solutions, and that collaboration can help reduce this risk of financial crime and keep goods moving, keep documents moving. So absolutely, now is the time to do that and pick up the phone to your banks and clients and make sure that we're not letting those fraudsters come through the channels.
Jaya, thank you very much indeed. I'm going to hand back to Jeff.
Thank you.
Just briefly to say, that most of us go about our jobs in an ethical and law-abiding way. And perhaps mostly we see this on our web pages, phishing, etc. type ways of exploiting us. However, they are also exploiting business, and this is an extraordinarily internationally vulnerable time for all businesses not to heed perhaps a wake-up call to the agility and the mobility of organised crime. Thank you, Jeff. And Jaya, thank you so much. Stay safe, everybody.
Many thanks to John and Jaya, and clearly much to think about on that subject. This brings us to the final section of today's webinar, our Q&A section, which I'm delighted to welcome Michael Vrontamitis, Head of Trade for Europe and the Americas at Standard Chartered, along with Caroline Stockman, Chief Executive at the Association of Corporate Treasurers. We're also going to bring in some of our previous speakers at some various points for this part where relevant. I see we had a few questions come in over the Q&A function, and we will get to those, rest assured. If I could first start with a couple of my own. My first question is for Michael. To what extent do you think government needs to step up and deliver a clearer support strategy to trade and industry? Do you think more joined up thinking is required?
Good morning, Jeff. Good morning, everybody. Morning, Caroline. Yes, so I think given the fact that I think the IMF just released information that we've had $9 trillion wiped off economic activity worldwide, the immediate focus is really going to be about rebooting the economy, and I think the measures that have been taken have not particularly been coordinated across different countries and regions. So the EU, the US, Japan, and the UK. So I think definitely greater coordination is going to be required. There is definitely a lot of exceptional measures that have been taken in the very recent past. But more joined up thinking is definitely required. I mean, I think we've seen some example of an increase in joined up thinking. So, you know, we saw a recent G20 trade and investment ministers meeting happen in the last couple of weeks, where they kind of agreed that, I say kind of, that emergency measures taken to tackle COVID-19, which should be targeted, proportionate, fair and transparent, and temporary, do not create unnecessary barriers to trade or disruption to global supply chains in the future, and are consistent with WTO rules. So I think we're beginning to see some join up. I think you know Rebecca's point around increase onshoring of trade, and I think that was also mentioned by Claire as well, that very lucky that the supply chain was onshore versus offshore, and there's going to definitely be a requirement to rethink some of this. I think in terms of the UK specifically, there was an industrial strategy launched in November 2017. I expect that strategy will not be kind of thrown away, but will be relooked at in terms of specific sectors, and looking at resilience of those sectors, just to try and limit bankruptcies, shortages, supply chain disruptions in those specific sectors that are now going to be considered to be strategically important, perhaps were not in the past.
Thanks, Michael. I suppose on the issue of strategic importance, this is a good chance to bring Caroline in. Welcome, Caroline. Caroline, how do you expect this to impact on the strategic approach people take towards China going forward, particularly bearing in mind the Chinese market is likely to recover first? And as a follow-up to that, and maybe Michael can come in also, do you expect to see changes to supply chains around essential equipment such as food, medicine and medical equipment, and how potentially trade policies might become more isolationist? I guess there's a lot to unpick there, but Caroline, keen to hear your thoughts.
Thanks, Jeff. Yeah, no, it's a really interesting question. I think you'd think logically to de-risk yourself in this kind of situation. I mean, pandemic is kind of the worst crisis you can have, obviously because of its global nature. But because of things happening in waves, you think to de-risk, you might then want to diversify your supply chain. But what we're seeing in kind of all areas of activity is protectionism. So we're seeing governments exercising protectionism. We're seeing banks. So we're hearing from our treasurers, for instance, there's a very large organization that employs a lot of people in the US, but can't get help from their US bank. And equally, when I speak to US treasurers, they're having issues with UK banks, with German banks, etc. So we see that happening. So if you look at those two factors, then you can imagine that people being as they are going to also exercise protectionism in other areas. So I imagine there is going to be much more of a kind of looking at how can we be self-sufficient, how can we be more agile in our supply chains, and do we really want to rely on someone else? And we've got this added factor, of course, you know, again, humans being human, this kind of fear factor because of SARS and COVID-19 originating in Asia. I think that we're reading a lot about people's nervousness of actually doing a lot of trade there. So I think there's going to be a shift in behaviour. We're seeing a lot of, you know, as people have moved to working from home, almost trying to protect themselves rather than looking at a more diversified picture. So that's where I think it might be heading.
I guess as a follow-up, so Michael, do you want to come in there?
Yeah, look, from my perspective, China is going to remain incredibly important to the global economy going forward. They're the first to recover. They are 10% of the global economy. They're one of the largest trading nations. I think what we've seen in China is a shift of physical supply chains out of southern China into other parts of the world. And companies are going to be looking at resilience around supply chains. So, you know, I do expect, you know, costs to increase. And, you know, in the past, everyone was focused on just-in-time production. It's going to be a lot more focus around resilience. And while there is protectionism, and you can just see by the numbers that protectionism has increased. I mean, I think if you look at some, you know, if you look at some G7 data, we've seen from about 300 non-tariff trade barriers in 2008, we've seen that go to over 1,200. So that protectionism is definitely going to increase. But I think at the same time, you're going to see probably increased stock levels, and that's going to include production equipment. So, you know, you're not expecting the UK to be able to produce suddenly products that they haven't produced in the past and aren't set up to produce. They're still going to have to import them from places like China. But I think what will happen is that you'll see a lot more stock in place in case of a crisis.
And as well as stock, in terms of the whole supply chain cycle, what we're seeing is a lot of the larger organizations, they're really worried about the supply chain in that kind of stranded middle that's not getting the support that it needs from governments, basically. You know, it's the rich kind of get richer and the poor get poorer in this situation as well. And I think that's a really important factor. And we're seeing some of the large organizations are paying their suppliers early. So although that will affect their working capital ratios, as will holding more stock, they are taking a sensible approach and thinking, you know, if our supply chain doesn't survive this, we're not going to survive.
Yeah. Sorry, Jeff. I think it's a really good point by Caroline, and it's going to be really important that when governments do look to support industry, that they're looking at very, very targeted SME lending schemes, providing some guarantees around that. Well, we've seen some in the UK. It was trialed in Asia and in Hong Kong during the global financial crisis, rather than trying to cut interest rates. Because all that's happening with cutting interest rates is that the interest rate is being cut. Okay, it's helping mortgage loan repayments, but it's not necessarily helping industry, because cost of liquidity at banks, because of the liquidity crunch that we've seen, is actually pushing the cost of borrowing up.
I think our next question is actually an opportunity to bring a member of our audience in. We were going to touch on Brexit, and this ties into that, but also into China. We've got a question from Hmrc. I suppose the overall point is where this leaves the Brexit discussions and whether an extension is inevitable. But also, how realistic would it be, the comments that Dominic Raab has made about the UK toning down relationships with markets like China, bearing in mind the mantra of global Britain post-Brexit and maybe not having that luxury to pick and choose who you do business with? Where do you think this leaves us all? Maybe you can go first, Michael, but then Caroline, you can come in off the back of that.
So I think it's unrealistic. I think it's talking to the population. I think what will happen my feel about what's going to happen is it's really going to depend on how the environment polls. I think Brexit, I think the government has come out and said they're not going to extend the negotiations. I'm not quite sure how they're going to manage to complete it in time. It was already a tough task before, having to do it virtually and having a lot of people now focused on a different crisis. So I think a lot of it is going to depend on how the UK responds. I think a UK general population responds to this, and whether they'll allow the government, if you give the government space to extend, or you could even see the EU, and perhaps the UK is waiting for the EU to come and request an extension, given the environment, which I think will make it the UK a lot easier to extend Brexit. From a China perspective, I just don't think that's feasible, to be honest. There's such a huge amount of production. I mean, I was talking to one very large client based out of the US a couple of years ago about their production in southern China, and his response to me was, there's nowhere else that could actually produce the amount of stuff that we need in one place. So it's just a huge amount of stuff that's produced. You can't underestimate it.
And Caroline, from your side, as an association representing a large group of multinational companies and small companies likely with interests in China, where do you sit on this?
Well, I think certainly in terms of Brexit, our treasurers are saying, alongside LIBOR transition, they're saying, that's not our focus at the moment. And they find it difficult to conceive from a kind of real economy perspective how the deadlines can go as they are in terms of Brexit. So that's one point. As I said before, with China, I mean, it's really difficult, and Rebecca said this at the beginning, really difficult to predict, because you could also say people have short memories. So whilst I think there is a feeling of not wanting to necessarily do business with China in some quarters, and I think there is a feeling of, can we just continue as we are and, forget Brexit for a while? People do have short memories and do adapt very quickly. And we did see there was a lot of frustration in the Treasury community while we were having these prolonged discussions last year. When it got to December, there was, even if people didn't agree with the outcome, there was a kind of big sigh of relief that now we can actually get on and do stuff. And I think that's the human nature thing. Again, people like some feeling of certainty and where they're going. So I think all these different, it's fascinating, thinking of the different outcomes potentially. But at the moment, we have this, stating the obvious again, this huge situation of uncertainty, and people just don't like that. And once we start to get further down the line and there is more certainty medically, then we're going to get some much clearer view on how people are going to behave and what the new normal is going to be. Not a very helpful answer, perhaps, but that's I think where we are at the moment.
I think it's very hard for people to feel they have the answers to all of these questions at the moment. I suppose a follow-up to you, Caroline, on that, representing a large community in the Treasury community. How robust do you feel business continuity plans have proved themselves to be, bearing in mind this is certainly a situation that not many would have predicted, if any, really? Yes,
it's really, really interesting. I think there are, there's a whole scale of where people are on this. And there's one of our treasurers was saying it's kind of their natural distrust of the system that has made them focus very much on BCP over time. And I've spoken to a number of treasurers who have always had that mantra, are we prepared? What are we going to do? They've carried out their risk processes very well. And they had a kind of seamless transition into working from home, into moving their treasury systems into a virtual space, shall we say. So we've seen a lot of really good transitions there. Inevitably, it's the smaller organizations that struggle because they don't have as much resource. And we have heard some of our treasurers kind of commenting on the fact that some of the banks have found it harder to transition, and that, in a sense, people have predicted this pandemic for at least a decade, not more, and using the regulator as an excuse to say, but we can't possibly work virtually. Some of our treasurers have commented on that and said, "Waha, now you see we can all do this." So that's quite interesting. The other interesting factor, maybe related a little bit, but not business continuity planning, but it's cash flow forecasting. And what's interesting, again, there we see a big a large range of approaches. There are people who've been very good at their cash forecasting. It's been part of their business processes. They've kind of sped it up. So they're doing more frequent cash forecasting. But there are others who, because of the nature of their business and because they didn't have, they had surplus cash most of the time because of their business model, they didn't actually do cash flows. So there's this quite a learning curve amongst some of our corporates where they're actually doing cash flow forecasting for the first time, and of course it's critical. So it's really interesting, some of the things that people are learning, and that's what you do in all these areas of risk, you put your money, your resource behind the things that are the most likely and the most important for you at the time. And if you were to do everything perfectly, you wouldn't be affordable as a business, which is why when we get to a pandemic, there are people who then really suffer.
Looking on a more positive note, and again, this may want to bring Michael back in for, do you foresee the situation driving more clients to digitise their cash and trade activities? Our audience also had a question around this, whether it's realistic to be able to get the engagement of all stakeholders, government, customs, etc., particularly during lockdown or restrictions that we feel we're going to be seeing for the foreseeable future. What's your view on that, Michael?
Well, look, I think there's a really interesting cartoon. So unfortunately, unlike John, I didn't do a presentation, but there's a really interesting cartoon strip that's sort of circulating around on LinkedIn and the internet at the moment, which is sort of a question, which is who has led the digital transformation of your company? A, the CEO, B, the CTO, or C, COVID-19. And I think we all know the answer to that question. This is I think Jaya mentioned sort of the temporary measures that we've been taking in this crisis of working from home and dealing with it from back. There's been a massive upgrade of bandwidth by companies. Employees are learning new tools and new ways of working. But once we're out of the crisis, I think every CEO is going to be looking at digitization, not only of their product, because that's where it's been the focus, if you like, over the last maybe 5-6 years, is the digitization of the product, but also the processes and the way and the resilience of their underlying business, back to the BCP point that was discussed. And I think it's a huge opportunity. This is kind of the seminal moment for digitization that unfortunately has come in this way. Can we see that the accelerated end of checks, for example, now that everyone has learned how to make an online payment over the last couple of months? I think in trade finance, we have seen a rapid digitization in parts of the business, like the open account trade finance business, like invoices, scanning, receivables, payables, because it's between two counterparties. It's between the buyer and the bank, or the seller and the bank. So it's relatively straightforward to digitize. I think those that are still working on paper will probably move those processes first. Initiating your guarantee, those kinds of things, which are relatively straightforward in terms of communication to the bank. But in some parts of the business, it's a bit more complicated, such as in documentary trade or the letter of credit space, or where guarantees have to be issued to a local market and they only accept paper. And for this, we're gonna need laws to be changed. And rules to be changed. And I think I sort of in my part, one of my night jobs, I co-chair the ICC digitization working group for trade and trade finance. And we, for example, we've gone out to the UK government, to the Law Commission here in the UK, to ask for a change in the laws to enable e-bills of lading and e-bills of exchange, which is not possible under rules that were written in the 1800s. And so, a slight tweak to the rules, or slight tweak to the laws that don't even need to go through Parliament, would enable a change. The ICC has written to governments in an open letter. We've also published a sort of digital hacks paper. I think there's a question around, what are banks doing, and Jai did cover it. But we have issued a digital hacks paper in terms of what banks are doing around the world and how they are responding, how they are dealing with paper, how they are, we issued COVID-19 force majeure advice, because, that's one of the key points. If your documents don't arrive, who's on the hook to pay is a critical point. So there is advice out there. I think we have issued a roadmap as well. So there's a lot of material now. The question is, I think we're seeing a bit of a change now. So India, for example, 2 weeks ago, have decided that they're going to go for electronic bills of exchange, and they've set up a group to look at it and enable India to shift. So I think we're beginning to see the momentum. I think the time for digitization, if you'd asked me, you always ask me these questions on digitization panels, when do you expect it? I always say sort of 10 to 15 years. I'm now in a 3 to 5 year camp.
That's quite telling, I guess, in terms of that speeding up of the process. Now, I did say at the start of this Q&A part, we bring some of our previous speakers back in, so everyone's still on the line. This next question is actually for Hmrc, which has been submitted from Richard Parrott, harking back to the earlier presentation part of this webinar. Hmrc, hope you're still there. Are there differences? Great. Are there differences between UK exporters of goods versus services in this situation? What's your take on that?
Sorry, the difference between UK exporters and
goods and services. Goods versus services.
In terms of the government support, in terms of the civils,
yes.
or the general?
Their experiences, their support. Richard has been quite vague here, but I think we're looking at their different experiences and their support and how.
So again, the guidance that we've been following around a holistic aspect of the activity that a given business has. So it all depends where the business is domiciled, where is the core activities, and where the core of the business service or goods is being consumed. So that was the essence of the guidance that we got from BBB. I'm sorry, I can't give you more. So
no, that's fine, absolutely. Well, our next question is from Theo Cook, and this is actually to Rebecca. So Rebecca, perhaps you can come back in for this one. Rebecca touched on tech and data. Perhaps she could expand a little bit more about what solutions she thinks will be valuable for trade finance, both initially in the short term and also those to be adopted in the long term.
So I think there's a very real problem here, and I think it's been alluded to in lots of ways all the way through the session, which is we are seeing the acceleration of digitization. There are a lot of things that have become accepted as normal, for example, managing online payments, etc. So the situation we're in now is how to harness the challenges that exporters, particularly in the SME community, are now feeling. How to manage the demand side, because I noticed there was a question on that as well, and how to look at this from the point of view of the SME exporter, and then link that to the requirements of the bank in terms of security, in terms of compliance, and so on. So I think in terms of technology, trade finance has always looked at, particularly the supply side. So we've always had a lot of supply side type conversations. It's been quite refreshing. Actually, if COVID has done anything for us, it's made us think more about the demand side. It's made us think more about the corporates, more about the small businesses, more about the treasurers, and more about how the market actually demands these things. So I think actually the technological challenge is to understand what the SMEs want, how they're accessing finance, where the gaps are, and how those issues can be addressed in a way that helps the SMEs learn why they're not getting financing from a bank perspective, but also understand from a bank perspective why they're not servicing the needs of SMEs. So I think there's a really big, interesting technology question there that in the end will help us solve that SME trade finance gap using technology. But I think we have to be very clever about how we do it. So I mean, it may be a blockchain solution. It probably isn't a blockchain solution from the demand side. It's probably an AI and machine learning solution. But we have to use technological solutions to effectively create a marketplace, because there are technologies that are beginning to do this, say in China. So, I mean, there are technologies, Alibaba is doing it. There are technologies that do this and manage finance on a more flexible basis. And I think that's probably going to be the way forward from here.
Thanks, Rebecca. I think we've got time for one more question. Thank you, everyone, for sticking with us. This final question comes from Gabby Buck, who is a firm friend of GTR. Hello, Gabby. I think it refers back to Mark and Claire's session, maybe Mark to lead on, which is what do you feel needs to be done on the buyer side when it comes to the ECA? Isn't it a lack of liquidity on the buyer side the main problem? Mark, do you have any thoughts on that?
Look, I think with some of the larger ECA projects, it's going to be very interesting now to see how the export credit agencies support as we go forward. I know Gabby recently has talked about some dollar liquidity issues in some markets. I think I suppose I'm thinking back to my sort of this well-used collaboration word, in that we've relied on ECAs to provide a lot of the support for some of the emerging markets, and you know, do we need to find another tranche of willing funders and risk takers for those markets now as as we start to emerge from this environment. So I think it's a very big question. I definitely haven't got the answer for it, but the answer is definitely not going to be one single source. Yeah, I think we can't rely on governments and these ECA entities to provide all the answers for us.
Thanks, Mark. I think that brings today's webinar to a close. I see we're pretty much on time now. And thanks to all of our speakers for their time, and to all of you who've tuned in and submitted your questions. Sorry we were unable to get around to addressing all of them, though I'm sure our speakers could welcome any follow-up if you wish to get in touch. You can find their LinkedIn profiles on the GTR website, and I know a lot of them are known to many of you. As has been mentioned before, today's webinar forms part of a series focusing on trading the new normal, so please watch out for future ones coming soon. We'll be covering markets such as East Africa and the US, and there'll be more being announced over the coming days. But until then, please take care everyone, and we'll see you next time.